ABC Thursdays.
Welcome back.
Grey's Anatomy is all new.
Why didn't you tell me you were pregnant?
The drama going down
Bungee jumping from the bridge as cord snapped.
We need all hands on deck.
is unbelievable.
You think you're God's gift to this hospital? You're just another doctor.
My relationship with Catherine is complicated.
I'm gonna sue you.
Your lawyers know where to find me.
You're unbelievable.
Grey's Anatomy. All new Thursdays, 10/9 Central on ABC and stream on Hulu.
Ryan Reynolds here from Mint Mobile. With the price of just about everything going up during inflation, we thought we'd bring our prices down. So to help us, we brought in a reverse auctioneer, which is apparently a thing.
Mint Mobile Unlimited Premium Wireless. How to get 30, 30, bit to get 30, bit to get 20, 20, 20, bit to get 20, 20, bit to get 15, 15, 15, 15, just $15 a month? Sold!
Give it a try at mintmobile.com/switch.
$45 upfront payment equivalent to $15 per month. New customers on first 3-month plan only. Taxes and fees extra. Speed slower above 40 gigabytes. See detail.
Welcome back to another episode of Investies. I'm your host, Linda Garcia. This week on the podcast, we are going to catch up on what took place last week with the feds making a shocking move, decreasing rates by 50 basis points. Before we get into Fed Chair Powell's decision to decrease interest rates by 50 basis points, I wanted to talk to you about two perspectives that exist in economics, specifically when looking at the economy and making decisions on monetary policy like increasing or decreasing interest rates. Very similar to the sentiment and perspective of bulls and bears, bulls being positive on the market, bears being negative on the market, and then there actually being a overall sentiment on perhaps the S&P 500, where we are in fact in a bull market or where we are in fact in a bear market. We can have sentiments about the market that aren't necessarily tied to facts. This is very similar to monetary policy. In monetary policy, we call this dovish or hawkish. So you're on one side of the team. You're either a dove or you're a hawk. And the sentiment of a dove is to be positive. It is to be in love, so to speak, with the current status of the market. Everything is going good. We can make soft decisions. Hawkish is you are on the lookout, specifically observing for any threats in the market. You're making clear-cut decisions, and you are weary of any data coming into the market. Basically, what this boils down to is that someone that is dovish is positive on the economy, and someone that is negative is hawkish on the economy. Obviously, Fed Chair Powell is feeling very dovish on the economy as of lately, and you all know that I have been feeling hawkish on the economy for a long time. In terms of how I feel towards monetary policy, I am weary. We are not past inflation, and I think we should act as such. But who am I? I'm just a girl in my office on the microphone expressing my perspective. We had all of the FOMC members meet September 17th and 18th. FOMC stands for Federal Open Market Committee. They voted yes on 50 basis point decrease with the exception of one member. Let me tell you why that's a big deal. Aside from having one member on the committee making me feel completely normal for being a hawk on the market, this is a really big deal because it is the first time that a governor votes against the decrease of interest rates since 2005. That's 20 years. That's a really long time to not have a governor vote against the decrease of interest rates. When we think about interest rates, typically, we think about low interest rates. For many of us, at least my age, I'm 44, as adults, most of our life, we have seen low interest rates in the market. But we've talked about this several times before on the podcast, where we rarely consider how high interest rates were in earlier years. It was not normal to have low interest rates. I mean, 5% was considered a fantastic interest rate to get on a mortgage. In 1981, the average rate was 17%. Okay, let's think about that. So for us, we have been so accustomed to having all of this accessibility to what is practically free money, but it wasn't always like this. And I feel like we are being a little too dovish considering the type of inflation that we have felt. Remember, nothing is free. No stimulus check was free. We paid it back in inflation. We have to be conservative, I think. I mean, this is just me, you know? I believe that we should be conservative when we're looking at interest rates, especially when it's affecting our inflation and it is affecting so many lower income communities. I know that I'm beating a dead horse, and I have been beating it since the start of the year. I have to say that I was very happy to see that someone voted against this. And I want to share with you her perspective and the reasons why she voted against 50 basis point increase. Governor Bowman recently made some remarks at the bankers group in Kentucky. Referring to the basis point cut, she says, it could be interpreted as a premature declaration of victory on our price stability mandate, accomplishing our mission of returning to low and stable inflation at our 2% goal is necessary to foster a strong labor market and an economy that works for everyone in the longer term. She goes on to discuss specific concerns that she has on what this move would indicate to the economy overall. So she feels that it would send a message of fragility or greater downside risk to the economy. She feels that the markets might expect a series of large cuts, that large amounts of sideline cash could be put to work as rates fall. She fears that it will stoke inflation, and her general feeling is that rates won't need to come down as much as her fellow policy makers have indicated. Let me go into a quote here where she says, "In light of these considerations, I believe that by moving at a measured pace toward a more neutral policy stance, we will be better positioned to achieve further progress in bringing inflation down to 2% target, while closely watching the evolution of the labor market conditions." And we have begun to see some of her concerns manifest. For example, where she says that the market might expect a series of large cuts. We are for sure already seeing that. The market is pricing in that the next rate cut will be before the year ends, another 50 basis points, and that we will potentially see 25 basis points at the beginning of the year, which absolutely blows my mind. I cannot wrap my head around that. And now that I'm reflecting and looking back at how all of this unfolded, I sort of feel like I have to take the market at its word, at what it feels is going to happen, unless, of course, we receive data that moves the Fed in a completely different direction. But the reason I say this is because we had never heard about a 50 basis point decrease. We always heard that 25 basis points was what was expected, and that was the narrative. Until the week that Fed Chair Powell cut rates, we started to hear analysts saying that they're expecting 0.5%, 50 basis points. And I thought that's just crazy. Maybe they're saying 50 basis points so that there could be some sort of pressure or normalization at the thought of 25 basis points. But now I wonder if rumors were flamed from someone specifically in the committee, and we were just being made aware that potentially a decision was being made that looked more like 50 basis points. Another one of her concerns that we are already seeing manifest as well is the indication that this might send a message of fragility or greater downside risks to the economy. We already have so many analysts on CNBC and on other finance and economic publications talking about how a jumbo cut like this, that's what they're calling it, a jumbo cut, could be a potential signal that the Fed sees a lot of downside further down the line, meaning that we could potentially be entering a recession, that the job markets could potentially be crashing. And so you already start to see that narrative after those cuts. So two of the things that she's called out have already manifest. Obviously, stoking inflation is something that we still need time to see if that manifests. But I think her feelings on not needing such a big rate cut is spot on. Granted, consider the source. You all know I've been feeling like that, but it is a little bit of a relief as I've been studying the market for a long time and just being a student of the market, wondering why no one else feels the way I do, why I felt so siloed. I don't feel siloed anymore. I'm glad to hear her perspective. And obviously, as you heard, we do share similar perspectives there and fears as to what this can do to the market moving forward.
This episode is brought to you by Atlassian. Atlassian makes the team collaboration software that powers enterprise businesses around the world, including over 80% of the Fortune 500. With Atlassian's AI-powered software like Jira, Confluence, and Loom, you'll have more time to do the work that matters. In fact, Atlassian customers experience a 25% reduction in project duration per year. Unleash the potential of your team at Atlassian.com. Atlassian.
Let's discuss how the market initially reacted to the 50 basis point cut, and then let's get into what we are seeing in other areas of the economy. Initially, when Fed Chair Powell made this decision, we saw the stock market go into negative territory. What I think happened is the market still hadn't caught up to the idea of 50 basis points. As I discussed earlier, this was certainly a shock to me. We had only heard about 50 basis points about a day and a half before the decision was made. So I think that rumor hadn't even fully moved itself through the market. It was a shock. The market, I think, was trying to process it. It processed it overnight. The following day, we saw the S&P 500 just jump. We hardly ever see jumps like that in the S&P 500. Typically, when we see increases like that on a stock chart, it is on an individual stock chart, not on an index, not on a grouping of stocks. So if you were to open up your stock chart now and take a look at a chart that is a 1 month chart, you will see that just that big bump where the stock market was celebrating that it actually received 50 basis points. Remember, the stock market is forward-looking. It had already priced in 25 basis points. The market was sure. We've been talking about this. They were certain that they were going to get 25, but they had not priced in the possibility of 50. So you see that immediate jump, which was crazy to see the following day. I'm just not used to seeing jumps like that on an index. And speaking of the indexes and the S&P 500, I just want to remind you all that typically September is the absolute worst month of the year. It has been pricing in like this historically for several years. Now, the last 2 weeks of September are known to be the worst. And we actually broke that this year. We saw some downside at the very beginning of September, where we were picking up most of the downside from August. And then the rest of the month, we truly saw the month recover. And again, we hit new all-time highs. So we saw a little bit of a shift in the market. This is an election year, so it is pretty tricky, and we are dealing with a different scenario in terms of rate increases and things like that. All of that news is catalyst to the market, and it will behave accordingly. It doesn't matter what it has done historically. So that's always really important to take into consideration. History does not repeat itself, but it does rhyme. Moving away from the market, let's go ahead and take a look at the mortgage industry, where this would be another space that would be impacted in a massive and immediate way. We're looking at mortgage refinance. We had applications to refinance home loans increase all the way to 20%. Now, if we compare that to the week prior, we're looking at a decrease of 0.3% of folks that were applying to refinance. So that is a huge jump. 20% increase in applications to refinance home loans compared to the previous week, with a 0.3% decrease. Now, if we look at the same week a year ago, then we are looking at a demand that is up 175%. You can see there are many folks out there eager to lower their mortgage rates and refinance their loans, as they should be. That is always an industry where we're going to see immediate reaction. Of course, the purchase of a home is a little slower. We did see mortgage application volume increase only 1% compared to the previous week, which was actually 2% higher. So it's pretty obvious when we start to think about it that that part of this industry is going to be a little slower to move. Perhaps after this decrease, folks are thinking that it's time for them to start looking. They're moving through the process, applying for mortgage applications. It's a much slower sector in the industry, and that makes perfect sense. Thank you for listening to this week's episode. I'm your host, Linda Garcia. You're listening to Investies, a Cosmic Standard and In Luz We Trust production. A special thank you to the team, Asia Simpson, Eliza Smith, and Jacob Winnick.
At your job, do you ever have to deal with a nose roller? How about a snub pulley? Well, if you're installing a new conveyor belt system, dealing with the different components can sound like you're speaking a foreign language. Luckily, you've got a team ready to help. Grainger's technical product specialists are fluent in maintenance, repair, and operations. So whenever you want to talk shop, just reach out. Call, click Grainger.com, or just stop by. Grainger, for the ones who get it done.